Well, welcome back to our multi-part series on what to do with your TSP, especially after the early 2020 major adjustments that keep happening in the marketplace. Very rarely have we seen, or maybe never in recent history anyway, a 1 month time in the month of March where we saw the market drop 20% and go up 20% in the same month. That's a bear market and a bull market technically. And that was a difficult time for individual investors. So we're bringing this information to you to help you bring some peace and some light into your investment strategy, offer you some fundamentals to help you. We've already talked about getting your risk tolerance in line, and then once you know who you are as an investor, allocating that money appropriately into the right levels of investment so that you have the right risk level to match your sleep at night number so you can rest easy and not worry about what's going day by day in your retirement accounts, because you will retire. You will stop saving money for the rest of your life, and this money needs to grow and last a long period of time. So let's turn to the third element of our investment science, and that would be to reallocate tactically. To reallocate funds tactically is to maintain a balanced approach. If the market surges and one of your investments is suddenly doing well, do you ditch your other investments and throw everything into that one basket? This generally is not a wise plan for long-term growth. The principle of buy low and sell high is a good rule for managing your investments. This strategy manifests itself in a willingness to sell an asset that surges and reallocate money to funds that have not been performing as well to maintain the level of risk you are comfortable with. This principle also means removing emotion from the decision-making process and not chasing investment returns. Trying to time the market correctly can leave an investor with minimal returns that do not meet long-term goals. Reallocating tactically is easy enough to say, but more difficult to put into practice. There are two main enemies of this investment principle: fear and greed. These two elements are active agitators against maintaining a steady investment course. Fear and greed thrive on emotions. The more emotion you let into your investment strategy, the stronger and more powerful a role fear and greed play in your life. Horror story after horror story can be found about individuals who succumb to greed and chase get-rich-quick schemes after scheme. Like the sirens of Homer's The Odyssey, greed sounds so sweet, but will only bring financial ruin. If fear and greed are your main financial advisors, it's time to subtract them from the equation. For long-term success, it's vital to reallocate funds tactically. This means we need to move money from that thing that has gone up dramatically into that thing that's gone down dramatically to keep you in your balance. So let's play out an example for a brief. If you are a 50-50 investor, it's oversimplifying, but let's walk through this case, and you're 50% C fund, 50% G fund, and the market surges, let's say it goes up. And now all of a sudden, because the C fund's done so well, it represents 60% of your holdings. And then the G fund only represents 40%. Do you keep riding that C fund up higher and higher? Well, we know it doesn't always go up. We've seen that in recent history, haven't we? So what we actually do is when it hits those peaks, when it has gone up a dramatic percentage, you sell that C fund, buy that G fund, and get them back to 50-50. So you have some balance in your portfolio. This allows you to, again, do that sell high, buy low function. And imagine, I know no one has the crystal ball. We can always look back, in hindsight as 2020. Imagine after a great 2019 when the market, the C fund saw over 30% growth. At the end of the year, you have said, okay, let me take some of those gains off the table and get back to my right allocation between, in my simple example, the C fund and the G fund, and would have sold some of that to bring it back into balance. How much that would have saved you in loss through that terrible time of the first quarter of 2020. That's an example of how that reallocating tactically can work to your advantage. So you don't want to do this every day necessarily. You don't want to do it every 5 years. There's a fine balance of how often you should be reallocating. But I will say it needs to be done, or else your portfolio will, by nature of the market doing crazy things all the time, you'll stay out of balance and find yourself with too much or too little market risk as you move forward. So let's go back through all three. First, we want to determine our investor profile, and then we want to allocate our money based on that investor profile. And then from time to time, we want to reallocate the money, get it back in line with who we are as an investor. And there's one more step that I want to share with you next time. So thank you for tuning in. We look forward to talking again in the near future. And if you need help, we at Retirement Benefits Institute are ready to help you. We can help you talk through what to do with the TSP. We can talk about what it means to have enough money so that you can be ready to retire. We can connect you with a professional that can help you. Call us at 877-864-1145. Until next time, thank you.